Good morning. This is Japanese Economic Review Channel. Today we review the market activity from yesterday, July 9th, 2026. It was a day defined by a stark contrast between rising geopolitical tensions and the structural boom in AI. We saw a significant divergence where macroeconomic fears regarding inflation collided with technological growth, creating a highly unique performance across both global and domestic indices. Yesterday, the Nikkei 225 staged a powerful four-day rebound, surging 924 points to close at 67,743. This was a notable decoupling from the NY Dow, which had dropped over 576 points in its previous session. While the Dow suffered from geopolitical jitters, the Nasdaq's resilience provided a vital tailwind for Japanese tech stocks. Meanwhile, the yen remained weak, trading at approximately 162 per dollar. The primary drivers yesterday were twofold. On one side, retaliatory strikes in the Middle East and hawkish political warnings sent oil futures higher, stoking inflation fears and punishing industrial staples like Boeing. Conversely, the AI and semiconductor boom allowed the Nasdaq to absorb these macro shocks. This set a bullish stage for the tech-led buying that dominated the Tokyo market opening yesterday morning. Yesterday's intraday activity was front-loaded, with the Nikkei hitting a peak of 68,447 before noon, a gain of over 1,600 yen. However, momentum stalled in the afternoon. Crucially, market internals revealed a narrow rally. Despite the index's massive surge, nearly 60% of the prime market actually declined, with 917 decliners far outnumbering 585 advancers. This highlights that the gains were heavily concentrated in select heavyweights. Sector performance yesterday showed a clear split. High-tech and semiconductors such as Advantest and Tokyo Electron led the advancing sectors. Commodities also gained as oil prices rose. In contrast, sectors sensitive to fuel costs, such as air transport, JAL, ANA, and autos, Toyota, Honda, faced significant selling pressure. This further illustrates the bifurcated nature of yesterday's trading session. The East Growth Market 250 Index also saw a positive turn yesterday, benefiting from improved investor sentiment. We saw strong interest in forward-looking industries, with space and drone-related firms like Astroscale and Liberaware gaining ground. Recently listed names experienced a sharp rebound. However, the appetite remained selective, as seen in the decline of other recent IPOs like Tiny. Corporate news yesterday highlighted long-term strategic shifts. Mitsubishi Electric's Finnish deal and JVC Kenwood's U.S. acquisition signaled a focus on global expansion. In technology, Hitachi announced its new physical AI system while tech firm entered the drone-based 3D modeling market. These moves suggest that despite macro headwinds, firms are actively pivoting toward automation and global market penetration. In summary, yesterday's market was a perfect example of a bifurcated reality. While the headline indices showed massive gains, the internal market breadth remained vulnerable. The decoupling from the Dow and the aggressive inflows into AI assets highlight where current conviction lies. As we move forward, the key will be monitoring whether this tech-led momentum can broaden or if geopolitical risks will continue to weigh on the wider market. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.